Let's talk about primary issuances. And as you've probably seen over the course of the last several weeks, the primary markets have been buzzing. A lot of fresh issuances, and this is another one that we're talking about. TrueAlt Bioenergy is the name of the counter that we're talking about, not yet a counter. In fact, a company that is opening its IPO tomorrow. And we're joined by the management in studio exclusively, Vijay Nirani, who's the founder and managing director of the company. Vijay, thanks so much for taking the time. Let me set the context and ask you about this issue. 750 crore rupees of a fresh issue, a small OFS or offer for sale, 89 crore rupees. What is the objective? Why hit the market now?
At the outset, thanks a ton for having us, Alex. It's splendid. It's super exciting to be able to take our company, our passion to the public, to the markets. Bioenergy or biofuels has been the core of our being. And considering the push and the tailwinds that the government of India has, and the priority and the national importance this sector carries, we thought that this is there is no right time for us to take the company public, but looking at the growth opportunities, we said now that we're already the largest in manufacturing of ethanol by installed capacity, we also have other variants like compressed biogas and eventually sustainable aviation fuel. All these part and parcels of the biofuels gamut. The idea largely is to try and increase the energy output through biological sources, typically using grains and sugarcane derivatives, and eventually shifting focus to second generation or advanced biofuels. So we decided this would be the right time considering the markets are right and the opportunity for the company as well as the country is at its peak.
So 750 crore rupees being raised, and that's going to be utilized by the company, but what is the objective? What are you going to be using these funds for?
So of the 750 crores, 172 odd crores is going for capital investments into one of our plants that is getting converted into dual feed. Now, we currently operate 5 ethanol plants. All of them are monofeed.
Okay.
And monofeed meaning we use only the sugarcane derivatives, like the sugarcane juice,
molasses.
syrup, and molasses. Yes.
Sure.
And now that we see that the focus between the government policies would be between grains and sugarcane derivatives, depending on the quantum of the product itself each year. So we then realized that it's always best to be flexible, one, so that you consume the most abundant raw material available, and also two, to help build up bottom line margins.
Okay.
So about 170 odd crores is going into the capital investments there, and we are almost finishing the capital expenses, whatever had to happen even before the issues open. So that's a good thing that we've done.
So that's at one plant. You said you have 5
That's
plants that produce ethanol at this point, and all 5 are single feed, mono feed.
So of the 5, like I said, 2 of them we have already converted into dual.
Dual, okay.
The third one, we are coming to the public markets to raise capital.
And what about the other 2? Will they remain mono feed or will they also transition?
So of the 5, 2 will remain to be mono feed because we have more than ample required molasses within one of our group companies, and also the molasses balance across our geographical area is too large.
Okay. Where are these plants located?
Most of them in the south of, in the North Karnataka, in the south of India.
So, and so therefore, where are you sourcing your feedstock from?
So currently the feedstock, that is molasses, typically came from the sugar mills in and around, part of which was also our group company, and also in the open markets that we were getting. So back on the proceeds, so 172 crores is going back onto CapEx, capital investments. And typically this business revolves around your gunpowder on what kind of a working capital limit you can have. Because the price of the raw material has a huge variance, especially the commodities, if you track commodities, right? The idea is to try and build enough raw material and have it as inventory so that you can keep having a stable bottom line or an improved bottom line. So about 425 odd crores of the issue is going in for working capital requirements.
Okay.
And the rest is general corpus.
General corporate purposes. Okay. So to delve a little deeper into the economics of it, you are moving to a dual feed, right? Or is it multi-feed?
It's multi-feed now.
Multi-feed.
Yes.
Okay. So you're moving to multi-feed, which essentially means that you will use grains like maize, you will use grains like rice to supplement as and when required the molasses and the sugar cane feed that you get. In fact, we're speaking on a day when the government has announced that it is not increasing the ethanol prices derived from a feedstock of sugarcane. So can you explain to my viewer why this is important, where you have a dual or multi-feed approach, where you can perhaps in certain situations improve the yield of the ethanol that you produce
Yes.
by using different raw materials?
Yes. So if you look very closely on the policy that has come in, or rather the tender that has come in, they have increased the price of ethanol derived from rice. And also they have prioritized rice procurement this year because the stock of rice in the country is at its ever highest.
Yes.
Now, another principal reason for us to becoming flexible in terms of feedstock consumption is exactly that. So whatever government has priority to push, and we are ready to consume that. And we consume that and ensure that we have a healthy bottom line is the whole objective for us to be a multi-feed plant.
Got it. You've spoken about the raw materials, you've spoken about capacity. Am I right in assuming that the capacity, overarching capacity that you have is sufficient? You won't have to add capacity at this point?
No. So we could definitely increase the the production capacities, but right now our focus is not to increase because we're almost 2,000 kiloliters per day, and that gives us the potential to supply close to 6 to 7% of the gross demand on the EBP program.
Okay.
So in a fragmented business, it's quite large.
Okay, the EBP program is the ethanol blending program
Petrol,
of
yes,
the government,
yes,
right?
yes.
So coming to that, so therefore are your largest consumers the oil marketing companies?
Currently, yes. And also there are avenues for the industrial use, that is in your chemical industry, FMCG products. All of these also consume a lot of ethanol. And going forward, we have this potential, or rather a vision, to convert ethanol into sustainable aviation fuel.
Okay.
That's a big avenue.
So you mentioned ethanol being your largest business. You have biofuel, which you're getting into, compressed biogas, and you have this aviation turbine fuel, right?
Yes.
But that is something that you're working towards.
Absolutely.
At this point, in terms of revenue contribution, what is the size of ethanol as a part of the overarching pie, and the remaining businesses that you have?
So it's been almost about just 3 years for us in business, and we've been scaling up quite healthily. So out of the total gross revenues in 23, we achieved FY23, we achieved a revenue of around 760 crores. In FY24, we had a growth of 50-55% and achieved a revenue of 1280 crores. And in FY25, we achieved close to 2000 crores, about 1980 crores. So there's a steady growth of almost about 50-55% year on year, and we expect the same to continue.
You expect a 50-55% compounded annual growth in top line over what period?
I wouldn't exactly give you that guidance just there, but we expect the growth to continue in a similar momentum. That is duly because our capacity has also increased from 590 KL in 23 and 1400 KL last year and almost 2000 KL in the current financial year. So most of the revenues, about 97% of the revenues currently come from the sale of ethanol. I would say about 88% comes from the sale of ethanol, to be precise, and about 12% from the sale of ENA, that's potable alcohol. That's another quantum that goes in. And about 2 to 3% comes from sale of compressed biogas. We only have one plant right now.
Okay. In terms of margins, because that ultimately is going to be a focus as soon as you list, you're working towards improving the feedstock, and therefore your financial metrics should reflect that at some point as well. But where does it stand right now?
So over the years, if you see, our margin or our EBITDA in 23 to 25 has almost increased by 0.5, 0.6% year on year. And it was at 14.4.
Margin.
That's the margin. That's EBITDA, I would say, EBITDA margin percentage. And last year we achieved close to 16% of EBITDA on total revenue. And we expect to continue that momentum. Reason being, we have this optionality to use the feedstock and map it to the different priced ethanol that is being taken up by OMCs.
What is the ceiling?
The ceiling currently for maize is around 71, and I would say the lowest bracket is for C-heavy molasses, which is at around 58 rupees a litre.
Okay. On sugarcane at the current price, one of the current manufacturers of ethanol was speaking to us earlier, and he was saying that you're getting about 37 rupee yield. Is that appropriate?
So that would be 37. On the revenue recovery of sugar in the sugar cane in itself. It's called the FRP rate, so about the fair and remunerative price. And if you're contributing the raw material price on the ethanol, It would somewhere be around a ballpark figure of around 37 to 40 if it's the sugarcane price on the ethanol contribution.
Okay.
But if you take the FRP price, it's almost at around 3670, something around that number, for a 10% recovery on sugarcane.
Okay. So I'm sure, and this is a fascinating conversation already. It's an exciting business to be in. One would assume that if we go to a higher blending, the market improves for you. But the last question that I have ultimately is the leverage and the gearing ratio, right? So what is the kind of long-term debt that you currently have on your books, and trajectory, where do you expect it to go?
Okay. So we've done a gross capex, and again, the company is relatively young, so we availed equity and debt to set up the facilities. And of those facilities, on a gross block of close to 2,100 crores as on date, I would say, we would have a debt of only about 1,100 crores, that is the term debt. And interesting fact is, all this 1,100 crores of debt is covered under the interest subvention scheme.
Okay.
So that's a good tailwind we have, where applicable rate of interest for us on that 1,100 crores of term loan on a gross block of 2,200 crores is only about 4.5%.
Okay.
So it's a very soft capital, which would help us create a good leverage or ratios for us.
Interesting. Okay, I wish you all the very best. Thank you so much for joining us in studio, and happy listing.
Thank you so much, Alex. Thank you.